All right, diversification we talked about a little bit yesterday. And I just would say that, again, the U.S. economy represents, I think, around 23, 24% of global GDP. And a lot of foreign trustees, I mean, if you work with let's say a big bank like UBS in Switzerland, they would probably come up with some sort of global investment strategy for you. Some people want that, some people don't. Some people might want to use a trustee in Belize where they can buy, agro properties in Panama, which, the trustee at UBS would never let you do. But so back to the UBS trustee, they're going to want to see you with true global diversification. So they're probably going to tell you, oh, look at all these U.S. stocks and bonds and mutual funds. We need to sell a bunch of those, and we need to replace them with European, Asia, Latin American stocks and bonds and mutual funds. So it's going to sort of force you into more global thinking about your investments. Because again, normally the mindset is much, much longer. I mentioned the one family, 18th generation. These trustees, Switzerland's a great example. They're set up to really want to be your trustee for 100, 200, 300 years. And that's the way they view things like your investment strategy. So you're going to see a lot more things like hard assets. Again, I'm not a gold bug. I'm not saying put all your money in gold, but with the foreign trustee, you're at least going to have the conversation about, well, what about gold? What about platinum? What about diamonds? What about real estate? Because those are the types of assets that really last, long periods of time. If you look at the Dow, I think, I can't remember which company it was. I think it's General Electric. I think General Electric is the only original Dow company, from 100 years ago that's still there. So you're talking about the best and brightest, the Dow 40, there's one company. What happened to the other 39, right? But in the same 100 years, no one would say that, gold's been a unit of wealth for over 5,000 years. And I don't think anybody thinks in the next 100 years, gold's going to become worthless. Real estate. If you owned a home like that you wanted to stay in your family for years and years and years, you would consider putting it in a trust, wouldn't you? If you're going to buy a condo in Nicaragua for $100,000 and you plan to own it for 3 years and then flip it, you probably wouldn't want to take the time and effort and energy to put it in a trust. But with a house like this, if you said, hey, my grandfather built this house and I want it to be in the family, for the next couple hundred years, then a trust would be the way to do it. And I mentioned at the very end of my presentation yesterday the concept of debt. There's two ways, and I don't want to get overly into legalese, but there are two ways that a plaintiff can go after you and your assets. And one of those ways is called in personam, Latin, meaning over the person. In personam jurisdiction. So for example, I live in Pennsylvania, and I'm a citizen of the United States, which means that a Pennsylvania court and every federal court in the country has jurisdiction over me. Okay? The other way that you can get jurisdiction is called in re, R-E-S, Latin, meaning the thing. So the jurisdiction over the thing. So if I own a beautiful house like this house here, let's say in New Jersey, I could certainly retitle that property to a trust in Belize. We'll stay with that as the example. I could retitle that property just the same way I gave my BlackBerry to Barbara. I could give the title to a foreign trustee, and the in personam jurisdiction would be gone. But what about the in re jurisdiction, the jurisdiction over the thing? I can't pick that mansion up and move it, can I? So I'm never, ever going to defeat the in re jurisdiction over U.S. real estate, which means I could always have a scenario where a plaintiff convinces a judge in New Jersey that they have a claim against this property, and if I don't show up and defend as a foreign trustee, they could simply order the house to be sold at a sheriff's sale and the money given to the plaintiff, right? So that would undermine the value of the foreign trust. But again, using the example I used yesterday, what if I went to Bank of America? Let's just say this house costs $5 million, and I got a loan for $4,950,000, and I put that cash in my foreign trust overseas. Now that cash, there's no in personam jurisdiction or in re jurisdiction over the cash. There's no in personam jurisdiction over the thing. There's in re jurisdiction over the thing, but what is it really worth? And is anybody going to get in? There's really only one entity that can get in front of Bank of America, and that's the local tax people, right? If you don't pay your local property taxes, they can trump everyone. But nobody else, no plaintiff is going to be able to get in front of Bank of America. So when you have that big mortgage sitting there on that property, which could go on for years and years and years and decades and centuries, however long you want it to go on, because your cash is sitting offshore, maybe in a conservative CD making 4% interest, and your mortgage is in the U.S. and you're maybe paying 2 or 3 or 4%. So it's kind of a wash. You get the income from the CD to pay the mortgage. But what you've done is you've taken an asset that you can't pick up and move. And I suspect there are a lot of people in this audience that have hard assets like that makes up a substantial portion of their wealth. And if you're in that category, then debt is really a technique where you can get the money out, and then in some cases, because people still have relatively good incomes, they can now take that money that's offshore and not put it in a conservative CD, but they can use it to invest in whatever they want, right? They want to start getting that diversified investment that we talked about before.